28 times growth in 12 months. That number is not coming from a meme coin promotion. It is coming from real-world assets sitting directly on the XRP Ledger. While most retail traders obsess over candlesticks and short-term price swings, something far bigger has been building underneath the surface. Tokenized real-world assets on the XRP Ledger have surged to over $4 billion. A year ago, that figure stood at roughly $147 million. That is not a small move. That is a complete reordering of what the XRP Ledger is actually being used for, and almost nobody outside institutional circles is talking about it. Here is what most media coverage gets wrong. Most headlines treat XRP purely as a speculative trading asset. Price up, price down, fear and greed index, technical breakouts, technical breakdowns. That framing is not wrong, it is just incomplete. It treats XRP like a casino chip. In reality, large financial institutions are quietly using the underlying ledger for something completely different. They are not buying XRP for short-term gains. They are building real-world financial infrastructure on top of it, and that distinction matters more than any single-day candle. Let us break this down into 3 key points. Point 1. The scale and speed of this growth is historically unusual. Going from $147 million to over $4 billion in tokenized assets within 1 year is not gradual adoption. That is exponential institutional movement. For context, Ethereum currently hosts the majority of all tokenized assets worldwide. But here's the part that should genuinely surprise you. The XRP Ledger is now ranked second in monthly growth for real-world asset tokenization, behind only one other network. While the broader market has been distracted by price volatility, the XRP Ledger has quietly become one of the fastest-growing settlement layers for tokenized finance on the planet. This is not retail-driven. This is institutional infrastructure being built in real time. Point 2. Who is actually building on this ledger matters enormously. This is not small, unknown projects experimenting with blockchain technology. We are talking about energy-backed commodity tokens, tokenized diamond inventories, senior credit instruments, and dollar liquidity funds. These are the kinds of financial products that require serious regulatory comfort before any major institution touches them. When traditional finance firms choose a blockchain to issue these products on, they are making a long-term infrastructure decision, not a short-term speculative bet. Major European financial institutions have already made moves onto this ledger over the past several months. Think about what that actually represents. These are organizations with compliance departments, legal teams, and risk committees that move incredibly slowly. For them to choose the XRP Ledger as a settlement layer means they have already done the due diligence. They have already cleared the regulatory hurdles internally. That is a signal retail traders rarely get to see directly. It does not show up as a dramatic price spike. It shows up quietly, in on-chain data, months before the market fully prices it in. Point 3. There is a massive disconnect between retail sentiment and institutional behavior right now. While this tokenization growth has been accelerating, retail interest in XRP has actually been declining. Sentiment readings have dropped to some of the lowest levels in months. Many retail investors have lost interest, frustrated by sideways price action and repeated failed breakouts. But here is the part that should make you pause. Historically, periods where retail sentiment is extremely low, while institutional infrastructure activity is extremely high, tend to mark turning points, not endings. This is the classic disconnect between price action and fundamental development. Price reflects what traders feel right now. Tokenization data reflects what institutions are building for the next several years. Right now, those two signals are moving in completely opposite directions. And historically, when fundamentals diverge this sharply from sentiment, the fundamentals tend to win out over a longer time horizon. Now let us talk about what this actually means going forward. If institutional tokenization activity continues at this pace, the XRP Ledger is positioning itself as core settlement infrastructure for tokenized finance, not as a speculative altcoin network. That changes the entire investment thesis. It shifts XRP from being purely a trading vehicle to being the underlying asset required to facilitate liquidity and settlement. More tokenized assets on the ledger means more transactions. More transactions mean more demand for XRP as the bridge asset facilitating those settlements. This is a slow-burning structural catalyst, not a one-day headline. But slow-burning catalysts often create the largest long-term moves, precisely because most traders are not paying attention to them while they build. On the other hand, there is a risk worth acknowledging here as well. Tokenization growth on a ledger does not automatically translate into XRP token price appreciation in the short term. Institutions can use the underlying ledger technology extensively, while the native token still experiences prolonged price stagnation. If demand for XRP specifically as a settlement asset takes longer to materialize than the tokenization activity itself. In other words, the network can succeed structurally, while the token lags behind that success for an extended period. That gap between network adoption and token price is exactly where most retail investors lose patience and exit right before that gap eventually closes. Here are two predictions based on everything we just covered. First prediction: if tokenized real-world assets on the XRP Ledger continue growing at even half this current pace over the next 6 months, expect increased institutional commentary connecting XRP demand directly to settlement volume. That would mark a shift in how mainstream financial media frames this asset entirely. Second prediction: if retail sentiment remains near these depressed levels while tokenization data continues climbing, expect a noticeable divergence to resolve within the following quarter. Price action would begin reflecting institutional positioning rather than retail trading patterns, likely triggering a sharper move than current technical charts suggest is probable. Both of these scenarios are measurable. Both can be tracked through on-chain data well before price confirms them. What matters here is recognizing which signal leads and which signal lags. Right now, the on-chain infrastructure signal is leading. Price is lagging behind it. So here's the question for you. Do you think this institutional tokenization growth eventually pulls XRP price higher? Or do you think the network can keep growing while the token itself stays disconnected from that growth? Drop your answer in the comments. This divergence is exactly the kind of signal that separates long-term thinking from short-term reaction. If this breakdown gave you a perspective you were not getting from mainstream coverage, hit subscribe so you do not miss the next one. I will see you in the next one.